Good evening, students. Welcome to the live coaching classes organized by Board of Studies, ICAI. Continuation to what we have learned in the previous class, place of supply. In previous session, we have learned on concepts in relation to domestic supply. That is, supply of goods or services which takes place in India, right? So this session, we are going to study on cross-border transactions. That means to say, import of goods, export of goods, import of services, export of services. So students, before we start with our today's discussion, as a formality, as a caution, please message me in the question window. You're able to listen me and you're able to watch the PowerPoint presentation properly. Let me get the confirmation on audio and video. On the basis of your confirmation, we will go ahead with our discussion. Yeah. Good evening, everyone. Yeah. And for your kind information, this presentation, what you're seeing here, along with this, I have shared a couple of MCQ and also Excel file, which you can download for your reference purpose. Thanks, Molly, for confirmation. Thanks, Shruti. Let's start with our today's discussion. Students, as promised, I have shared my Excel file. You can download that Excel file for your reference purpose. Okay. So today's class, we'll have a quick recap on the place of supply provisions in relation to domestic activity. For domestic activity, we have two sections. Section number 10, which deals with goods. Section number 12, which deals with services. We will go ahead further to discuss on importance of place of supply provisions for import and export. Then we shall examine a couple of examples how this place of supply for cross-border transactions have to be evaluated. As I have mentioned, students, please download the Word document. For today, I have given a couple of MCQs, which you can have as a reference. End of today's session, we will have a recap on this place of supply provisions, right? Now, to start with, the previous session we had discussed on place of supply for goods. So for this place of supply for goods, we have started with provision section 10. Under section 10, we have discussed where there is a supply of movement of goods. In relation to this movement of goods, we had an example with respect to sugarcane. When sugarcane has been cultivated, sugarcane has been separated, it has to be moved to the factory for the purpose of extracting the juice, extracting the pulp out of sugarcane. So this was an example with respect to movement of goods. Supply involving delivery of goods. This example, section 10, subsection 1, clause B, where we have discussed three parties: supplier, recipient, third party. Third party is the person who makes an instruction, who gives a direction to the supplier to give a delivery to the recipient, to give a delivery to a person other than recipient. What is the term recipient? We have discussed the definition called recipient. With respect to goods, the person who makes the payment shall be called as recipient. Similarly, with respect to services, the person who is responsible to make the payment shall be called as recipient. So what if there is no payment? What if there is no consideration? In those cases, the person to whom the possession, to whom the delivery is handed over, that person shall be called as recipient, right? This is one important definition we have discussed in our previous class. So with respect to this supply, which involves delivery of goods, the third party, the person who instructs for such movement of goods, shall be called as place of supply. Supply involves no movement of goods. We have discussed example of this DG set, diesel generating set, which is used for power backup. A building which has got a DG set, when The tenant vacates the premises, a new tenant comes into that position. The TG set installed in the premises does not require any movement, either by the supplier or by recipient. In that case, we have understood that the place where such goods are kept, that shall be called as place of supply. Next, goods are assembled or installed at site. We have discussed this particular provision in relation to petrol bunk. In case of a petrol bunk, the petrol tanker needs to be installed at site. The tank is a supply of goods. Also, one example we have discussed with respect to your windmill. Windmill looks like a fan from a far distance, but windmill cannot be sold as it is. You have to take it in a semi-knock condition, do the erection at the site. So when a windmill is erected at site, that is the example where we draw reference to this place of supply. Next, last and final, goods supplied on a board, conveyance, etc. We have discussed this example of Vande Bharat train. So when there is a movement of, when there is a journey on the train, goods have to be supplied. The first point of departure shall be referred as your place of supply. Next, with respect to this boarding conveyance, the point where the passenger embarks, the point at which these goods are taken on board, that shall be referred as my place of supply. I correct this point. With respect to supply of goods on a conveyance, the point at which the goods are taken on board, that shall be called as place of supply. In respect to services, there is a different treatment. With respect to goods, the place where these goods are taken on this board or conveyance, that shall be referred as your place of supply. Next, services. We had 14 services. Subsection 2 happens to be a general rule where if you don't find answer in 3 to 14, you'll come to subsection 2 as a general rule where this recipient is located, that shall be taken into consideration. Sir, what if I don't have address of recipient? Then the service provider from where the services are rendered, that shall be place of supply. With respect to immobile property, where the property is located, that shall be referred as your place of supply. Performance based, we had discussed this services in relation to outdoor catering or restaurant services. Where the activity is actually performed, that shall be referred as place of supply. Training and performance, this training and performance, we have to refer whether the recipient is a registered person or is an unregistered person. In case if a recipient is a registered person, that place where the recipient is registered, that shall be place of supply. What is the logic, students? In case of a registered person, why we will take that place as a place of supply? Answer, because of consumption-based taxation. The cardinal principle for GST law is consumption-based taxation. In case of a registered person, it is deemed that where such person is registered, that shall be place of supply. So what if the training is done to an unregistered person? The place where actually the services are rendered, that shall be place of supply. Next, with respect to admission with respect to a cultural, artistic, sporting, educational event, where the event is held, that shall be your place of supply. With respect to organizing events, again, we refer to two requirements. Check whether the recipient is registered person or unregistered person. In case of a registration is there, that is a registered person, the place where that person is existing, that shall be place of supply. Other than registered person, the place where recipient is located. With respect to organizing events, what if the organizing event happens to be outside India? Then the place where recipient is located, that shall be considered as place of supply. You remember we had discussed one example with respect to Rama visiting to Sri Lanka for a temple visits. So when event has been organized, though the entire trip is out of India, because Rama hails from Gujarat, place of supply happens to be a taxable territory. Next. From there, we have discussed on something called transportation of goods. Very, very important provision. Most of the times, we wrongly interpret this transportation of goods. It gains momentum, it gains importance for the reason section 9, subsection 3. Levy of GST on notified goods, on notified services, shall be paid by the recipient as if he is the supplier of goods or services. So with respect to transportation of goods, we have discussed three situations where transporter is from the place where goods are picked up, transporter is from a place where recipient is registered, transport is from a different state altogether. All three scenarios we have examined how we determine the place of supply. Students, I would recommend please watch for one question on MCQ with respect to transportation of goods. So if the goods are, the service is rendered to a registered person, the place of supply happens to be such person. So what if the transportation service is given to an unregistered person? The place where goods are handed over for transportation purpose, that happens to be my place of supply. Moving on, passenger transportation service. Now, with respect to passenger transportation service, it is little dicey, it is little complicated. For that reason, what the government said, look, if your recipient is a registered person, please go ahead with the place where such person is registered. So what if the person is not registered? The place where such recipient embarks, that is, he gets onto the board for the service. So the place where he embarks, that shall be called as place of supply. So what happens here, if I'm an unregistered person, I have done a to and fro ticket booking. For an instance, I'm a student from Kerala. I have to visit to my, say, I have to visit to Delhi for some educational participation. From Kerala, I book Air India to Delhi. Again, a return ticket from Delhi back to Kerala. Here, both the journeys will be considered separate. Journey from Kerala to Delhi, since the embarking happens at Kerala, place of supply happens to be Kerala. Return journey which starts from Delhi, the place of supply happens to be Delhi. Next. Services on board or conveyance. Now, slightly extended version of your previous provision. Services rendered. The previous service is booking of a ticket. Now, this, once you board a conveyance, the service is rendered on board boarding a conveyance. Example, students, we have discussed with respect to food consumed on board a conveyance. Supply of food for human consumption, reference to Schedule 2, shall be deemed to be a supply of service. So here they say, in relation to these services, please look at the first point of departure, where there is a continuous journey. The first point of departure shall be considered as place of supply. So with respect to section 12, 1 subsection 8, that is transportation. Second question, MCQ, you can expect on subsection 10 with respect to services rendered on board of a conveyance, boarding a conveyance. Reason, most of the time, remembering subsection 9 with respect to transportation, services rendered on board or a conveyance. These two questions are frequently tested. Next, with respect to telecommunication, very simple funda. It's an elaborative and detailed subsection with respect to a lease circuit or a landline. Where that lease circuit or landline is installed, that should be your place of supply. So what if the services are in relation to mobile service? If it's a postpaid service, the place where recipient address exists, that shall be your place of supply. So what if it's a prepaid? In case of a prepaid, We had a point of sale. The point of sale from where such recharge is undertaken, that should be considered for your place of supply. Banking and financial services, insurance services. These two services are pretty simple. These two services say, look, if your customer, if your recipient happens to be a registered person, the place where they are registered, that shall be place of supply. For a moment, I'm a company, have availed a corporate, have availed a loan for construction of an immobile property. For expansion of my building, I have taken a loan. Processing the loan, the banker charges me GST. I, being a registered person, where I have been registered, that shall be considered as place of supply. Similarly, with respect to insurance services. So what if recipient is not registered? The place where address exists, that should be considered as your place of supply. Advertisement, last leg of section 12. We had a plethora of aspects discussed in our Excel spreadsheet, where if services are rendered to a state government, central government, or any public authority, where services are rendered across India, like we have discussed with respect to advertisement, Beti Bachao, Beti Padhao, or your Sukanya Samriddhi scheme, or any other Pradhan Mantri Awas Yojana, or any loans given to a primitive sector. If there is an advertisement in a newspaper, on the basis of the paper's circulation in every state, the amount which needs to be paid, we will identify the place of supply. So what if the advertisement is done through a SMS based on the circle? Like every state has a circle, the number of subscribers in a circle where the SMS has been delivered, that should be taken into consideration. So we had various permutations and combinations which we have discussed at length in our Excel with respect to advertisement. So these are the provisions we have discussed with respect to domestic transactions. Now, moving on to cross-border transactions. Today's topic for discussion, place of supply with respect to cross-border transaction. Before I start with this discussion, quickly let me see if there are any questions so far. Yeah, there are no questions so far, so good. Thanks for the confirmation, students. Now, there is a reference to this constitutional provision without which implementation of GST would have been chaos. I'll give an example before we discuss on this Article 269. Say for a moment, there is an importer by name Nikhil. Nikhil imports goods into the state of Tamil Nadu. He has purchased laptop from, say, Singapore. Similarly, there is one more importer by name Dhruti. Dhruti stays in, say, Karnataka. Now, she has purchased a laptop from USA in the state of Karnataka. When the laptop is imported in the state of Tamil Nadu, in the state of Karnataka, question comes here, should the GST be levied by the respective state governments of Tamil Nadu, Karnataka, or should it be levied by the central government, that is Union of India? If we don't have a clarity with respect to interstate supply, then it's going to be a chaos with respect to administration of taxation, which existed prior to implementation of GST when we had VAT law, when we had sales tax across India. So this Article 269A empowers for levying something called GST in relation to interstate trade or commerce. So this provision says GST on interstate trade or commerce. Section 7, Section 8. Students, as we discussed, couple of sections whichever I refer to make note, just make a note. When you read the BERAC, when you read your institute material, have these sections in your back of mind. When you solve your problem, when you present your answer, referring to the respective provision gives little advantage in terms of securing marks. No hard and fast rule, but referring to section is better. Section 7 refers to interstate supply. Section 8 refers to intrastate supply. Interstate supply happens to be a transaction where supplier and place of supply are in two different states or two different union territories. I repeat, existence of supplier, existence of place of supply are in two different state or two different union territory. It's called interstate trade or commerce, right? So here, GST is a levy. GST on interstate trade or commerce shall be levied and collected by Government of India. And such tax shall be apportioned between union and states. When I say states, it includes your union territory also. Explanation, important provision. For purpose of this clause, that is Article 269E, Clause 1, supply of goods or services or both in the course of import into territory of India shall be deemed, look at the term, deeming provision, shall be deemed to be a supply of goods or services or both in the course of interstate trade or commerce. So, wherever we refer to the term import, I gave example of Nikhil importing a laptop or Dhruti importing a personal gadget for our consumption. So when I import goods, when I import services into the territory of India, it shall be deemed that it is an interstate trade or commerce, or it shall be a interstate supply. So this deeming provision is the cardinal principle for section 13, what we are going to study today. Section 11, what we are going to study. Section 11 is for goods. Section 13 is for services. Parliament may, by law, formulate principles for determining place of supply. When supply of goods or services takes place in the course of interstate trade or commerce. Now, before even getting into section 11, section 13, the basic points we have to understand: supplier and buyer, supplier and recipient. Please examine who is the supplier, where is the supplier located. Examine the recipient, where is the recipient located. If the supplier is out of taxable territory and the recipient is in taxable territory, it shall be called interstate trade or commerce. It shall be referred to as interstate trade or commerce, wherein your section 7 gets triggered. So Article 269A is a guiding principle for section 11 and section 13. And Article 286, this is the article which reduces the friction between state and center. This Article 286 says that restriction as to imposition of a tax on sale or purchase of goods. So it says that no law of a state. Whenever I refer to the term state, you can read as union territory also, shall impose or authorize for imposition a tax on supply of goods or services or both, where such supply takes place outside the state or is in the course of interstate import of goods or services or export of goods or services. Very, very important provision. It says that no state has a jurisdiction to levy a tax. We were referring to section 8. When I refer to section 8, it's an intrastate supply. So how do I know which state has to levy a tax. Like, for a moment, I'll give an example to make it more clear why this Article 286 is a important aspect. I'll give an example this way. Say, Dell Singapore. Hope my Excel file is visible, students. Dell Singapore, and let me take example of, say, Dhruti. Dell is a seller in Singapore, and Dhruti happens to be a recipient in Karnataka. Now, also, I'll have one more person called Nikhil. I'll say a trader, registered person in Tamil Nadu. Now, there could be a scenario where Dhruti places order on Nikhil. In turn, Nikhil places order on Dell. I repeat, Dhruti would like to purchase a laptop. She has placed an order on Nikhil, who happens to be a supplier. Nikhil, in turn, places order on Dell Singapore. When goods are ready for shipping, Dell has a choice to ship the goods directly to Nikhil in Tamil Nadu or ship the goods from Singapore to Karnataka. I call this as scenario 1. I call this as scenario 2. Now, when goods are dispatched from Singapore to Tamil Nadu, it shall be called as import. Similarly, when goods are dispatched from Singapore to Karnataka, again it is called as import. Now, the transaction between your Nikhil and Dhruti can be called as interstate, or let me mention here. Okay. It is a domestic transaction. I can call as a domestic supply. Because seller is in India, taxable territory, recipient is in taxable territory. So what if Nikhil has passed on the rights to Dhruti to import the laptop? So this happens to be a matter called interstate supply. Before the laptop has hit the Indian territorial waters, the moment the laptop is ready for dispatch from Singapore, Nikhil says, Dhruti, you file your bill of entry, get the goods delivered directly to you. In that case, it cannot be called as your intrastate supply. Rather, it has to be called as interstate supply. Look at this Article 286, where it says, if the transaction is outside the state, if the goods are located outside the state of Tamil Nadu, or it is in the course of import, before even the goods have reached to the customs port of Karnataka, both the transactions shall be called as interstate transaction. In that case, no state has a right to levy tax on that particular transaction. Students, don't worry. I'll re-explain this example when I come to section 11 in detail. As of now, please keep in mind Article 269A defines the cardinal principle, how interstate supply has to be understood. Similarly, Article 286, how the restriction is on a state to levy a tax on a particular transaction. These two are not in your syllabus. These are out of your syllabus. Just for your academical interest, once you get qualified, once you want to excel in this particular law, how you have to interpret, I just made you to understand. Now, couple of definitions before we get into the main provisions. import of goods, export of goods. Import of goods, section 2, clause 10 says, with its grammatical variations and cognate expression, means bringing goods into India. Bringing goods into India from a place outside India. Import of goods. So, the goods should have been out of taxable territory. Only when those goods are brought into taxable territory, it will be called as import of goods. One mark MCQ question. Mr. E imports goods from the state of Maharashtra to the state of Tamil Nadu. Can that be called as import of goods into the state of Tamil Nadu? We can say goods shipment from consignment from one state to another state, but it cannot be called as import of goods by any virtue of extension. Within taxable territory, we cannot refer to this term called import of goods. Next, export of goods. With its grammatical variations and cognate expressions, means taking goods out of India to a place outside India. Taking goods out of India to a place outside India. I'll give you a simple example to make you understand this export out of India. Say there is an exporter. Exporter, Mrs. ABC Limited. Let me, students, hope you are able to see my Excel file. Hope it's visible. Customer, Mrs. XYZ INC, say USA. On we are on 31st. Let me take example of 28th January 2023. Consignment worth 2,50,000 USD. Goods are ready for dispatch. Say 28th January, the goods are ready for dispatch. 30th January 2023, consignment handed over to CHA. CHA happens to be a clearinghouse agent. Say 11th Feb 2023, due date for filing GSTR 1. This is nothing but a statement for outward supplies. Now, 30th January, this supplier ABC Limited handed over goods to this CHA. On 5th Feb 2023, there was a fire accident and goods destroyed in customs area. Now, this transaction, as on 31st January, goods are ready for dispatch. And before 31st January, this supplier, ABC Limited, handed over the consignment to the CHA. And for reporting this consignment, he has to report as an export when he files his GSTR 1. For a moment, on 5th February 2023, the goods are damaged due to a fire accident in customs bonded warehouse or customs area. Now, please answer this question. Can I call this as export of goods as per this definition to clause 5? Can we call this transaction as export of goods? Export of goods with its grammatical variation means taking goods to a place out of India. Kaushik has given an answer. No. Ishwar has given an answer. No. Okay. Good. Now, in no circumstance we can call this as an export for the reason my export means that I have to take the goods out of India as long as the goods have not crossed the Indian territorial customs or Indian territorial waters. I cannot call as export. Here, wait and watch for again 1 mark MCQ question on these definitions. Students, don't neglect the definitions for the simple reason all your MCQs are based on these particular provisions, definitions. Now, export of service, every alternate attempt, we see one question framed out of this definition called export of service. And take it from me, once you get qualified, this is one area where most of the litigation happens with respect to complaints with export of service. Section 2, Clause 6 defines export of service means supply of any service when supplier of service located in India, recipient of service located outside India. So I can call as an export where supplier has to be in India, recipient has to be outside India. Place of supply is outside India. Now, this term place of supply, to understand, we have to examine provisions of section 13(1)(3). My provisions under section 13 gives me a clarity how we have to examine place of supply. Payment for such services has been received by the supplier in convertible foreign currency or INR wherever permitted by Reserve Bank of India. Now, export of services, when I say there is an importance under any taxation. When you refer to the World Customs Organization, World Trade Customs Charter, every nation, every country have to abide by the provisions of this first World Customs Trade Organization, where there is a treaty. It says that every nation has to export goods or services except the taxation of such soil, except the taxes of that nation. That means to say, you can export goods, you can export services, not the taxes thereupon. However, few goods which are of national importance can be subjected to export duty. So this is a treaty where a goods or services been exported. They say, please don't export the taxes thereupon. That means rest your taxes at the soil of your nation. So when I refer to section 16 of IGST Act, section 16 of IGST Act, which refers to zero-rated supply. The term zero-rated supply has connection with this definition to some extent with respect to services. So when I say it is an export of services, I need not levy taxes under section 9 or section 5 of IGST Act. So when I say export of service, I have been given a benefit of not to levy a tax. However, provision says, look, you have to repatriate the money. You have to receive the money in how? In convertible foreign currency, convertible foreign exchange. So whenever you have said this is the export of service, please ensure that you receive money in convertible foreign exchange or INR. INR to certain extent is permissible to be considered as export of service. Example, services rendered to Nepal, Bhutan. Nepal and Bhutan happens to be a territorial nations where services are rendered with respect to transportation, with respect to clearances, with respect to various ancillary services, where rupee happens to be a currency exchange between Nepal and Bhutan and India. So there is a notification by virtue of which the tax law says that in respect to certain services, though you receive money in INR, we shall consider that as an export of services. Only in those cases where there is a relaxation, you have to ensure that consideration has been received in convertible foreign currency. The last leg of definition, which is very, very important way litigation is happening with respect to this point, where they say supplier of service and recipient of service, supplier of service and recipient of service are not merely establishments of a distinct person. So they say that first and foremost, you identify there is an establishment. So what is an establishment? Establishment, I gave an example in our previous class. It could be a branch, or it could be a temporary place where there is a habitat, human habitat. For example, L&T is into construction of, say, bridges, which is considered to be a service. L&T, as a part of their construction activity, has to have temporary sheds across the stretch of the road where the construction is undertaken. The temporary sheds constructed for their engineers can be called as an establishment. It's like a branch. So services can be received, services can be consumed, services can be rendered from those establishments. Do you take registration? Generally, we take registration for the main place of business. These establishments are temporary in nature. Law says that, look, you have an establishment in a taxable territory, you have an establishment outside taxable territory. Then you cannot call that as an export of service. So the provision says supplier of service and recipient of service are not, look at the term, are not merely establishments of a distinct person. Now, I'll come to my Excel file to make you understand this term, distinct person. The term distinct person gains its importance from the provision called Section 25, which deals with registration. So, if I have a registration in one state and registration in another state, I call state 1, state 2. For the purpose of GST law, the provisions say that in case goods are supplied from state 1 to state 2 or services are rendered from state 2 to state 1, they shall be called as distinct persons for the purpose of Section 25, read with any other provisions. So this term distinct person has been borrowed from your registration related provision. So students, here, what if there is a registration in, say, state 1, that is Karnataka, registration in state 2, say UP, and establishment in Singapore. So why establishment in Singapore? For a moment, there is something called liaison office. There is something called coordinating office. Let's take example of this Andhra Pradesh, where before the existing government, when Chandrababu Naidu happens to be a chief minister of this Andhra Pradesh, there was a place called Amaravati. Amaravati was proposed to be a capital in Andhra Pradesh, and they have sought the services from an entity in Singapore for giving a structural design for this particular assembly in Amaravati. For liaising purpose, for coordination purpose, for a moment, let us imagine L&T is the main contractor and Hitachi, Singapore happens to be the main contractor, happens to be the design engineer, and service recipient happens to be Andhra Pradesh government. So here, Andhra Pradesh government says, look, I have appointed this entity as a service, the structural architect engineer. You please get in touch with this engineer for all design construction related works. And this place happens to be in Andhra Pradesh. So L&T for all coordination purpose, let me change this from UP to say EP. So L&T has a branch in, okay, I have written here. I would call this as a branch of AP. What is this branch doing? This branch is coordinating for this coordination with this main engineer in Singapore. So this provision says that any services between L&T AP and L&T Singapore shall not be export of service. Students, please understand, in this context, they were referring to distinct person, and distinct person has gained its momentum from section 25. In that backdrop, this particular provision, section 2, clause 6 says that in case if any services are rendered by L&T Andhra Pradesh to L&T Singapore, it shall not be called as export of service. Right? This is a reason why they have identified something called establishment. They have referred to something called a distinct person, and they have clearly mentioned that it is not merely a distinct person. In this scenario, they say, please consider this as not export of service. I'll change this example slightly. So what if L&T has taken a registration in Singapore for practical reasons as per the provisions of Singapore law? Singapore L&T cannot operate unless they have a setup or a branch or an entity in Singapore. Now, when Singapore has set up a entity in L&T has set up a branch or a new entity in Singapore, this term distinct person has no meaning. Reason: the person in India, the person in Singapore, both happens to be a different person. I cannot call as distinct person. Let me come back to my Excel file. L&T registered in India in AP. Similarly, L&T registered in Singapore as a different entity. If this is the case, I can call as not a distinct person, not a distinct person as per GST law. Rather, it shall be considered as a two different entities. Students, this is one particular point. You can expect a 4 marks theory question from examination point of view. You'll be asked for say 16 marks as a main question, where you have breakup of 4 marks on registration, 4 marks on ITC, 2 marks on your place of supply. This is one question where services among a distinct person can be expected. So before I go to the next provision, let me know if you have any doubts so far. Kaushiki has mentioned, so not properly clear, establishment of distinct person was a bit confusing when it will be distinct person. Okay. After this example also, it's not clear, Kaushiki. Let me repeat once again. Now, look at this box which is highlighted. This particular box where L&T is having a registration in Karnataka, L&T is having a registration in Andhra Pradesh. As per section 25, both Karnataka and Andhra Pradesh, L&T will be called as a distinct person. And in this example, Andhra Pradesh government have appointed structural engineer as Hitachi Singapore and main contractor for construction as L&T. So whatever design, whatever construction phase-wise it is in progress, L&T has to approach Hitachi for seeking their confirmation mile-wise or stage-wise. So sitting in the state of Andhra Pradesh, from the state of Andhra Pradesh, every time your L&T cannot coordinate with Singapore entity. So for that purpose, what they have done, they have formulated a branch in Singapore. Please understand, this branch in Singapore is an extended wing of Andhra Pradesh. This is not a different entity. So why is this branch is required? This entity in Andhra Pradesh coordinates with the branch in Singapore for doing a licensing work with Hitachi Singapore. So when I have this case, I'll come back to my definition where they say this entity in Singapore, establishment in Singapore, and this entity in Andhra Pradesh, L&T Andhra Pradesh, L&T Singapore, both are referring to one person called distinct person, means having same PAN. Because there is no different entity, there is no different identity, both belong to the same person, they say that they cannot be called as export of service. Because both are merely establishments of a same person, I cannot call as an export of service. So here, in this point, Kaushiki, in this point, L&T Andhra Pradesh branch in Singapore are persons of a distinct person. Accordingly, any billing or any money sent from Singapore to India to AP to Singapore, or any money drawn from Singapore to AP, I cannot call as export of services. Law says that both are distinct persons, both are mere entities of a distinct person. I cannot call as export of service. If I receive $1,000 from Singapore branch to Andhra Pradesh, or if I export $10,000 from this AP. Now, in this transaction, for a moment, branch in Singapore needs to spend $10,000 US. Now, why they have to spend? They wanted to do some paperwork, they have to do some consultation, some particular aspect. So when Andhra Pradesh L&T sends money to this Singapore branch, the money which has been sent or expense incurred, I cannot call as export nor import. This is money spent in foreign nation by an entity India. So for all practical purposes, this definition says that because both the people are establishments of a distinct person, it cannot be called export of service. So when I can call as export of service, if this entity L&T has registered as a different entity, for a moment I'll say L&T Singapore LLC, and this is L&T Limited. L&T Limited happens to be a entity registered in India. L&T Singapore LLC happens to be an entity registered in Singapore. Though the name is same, since there is a different registration, I call these two as a different entities. So money spent, money received from LLC or money sent to LLC will be considered, will be governed as a different party to party way. RBI regulations come into picture. Form 15CA, 15CB, in case of sending money out of India. When money is received from this LLC to L&T India, then it will be called as an import of service or export of service. So this is how this definition has to be understood. Hope this is clear, Kaushiki. With this example, this explanation, hope it is clear now. Great. Now let's move on further. Import of services. The way we have discussed export of services, another definition called import of service. Import of service means where supplier of service is outside India, recipient of service is in India, and place of supply is in India. So I'm a recipient, I'm in India. My service provider is located out of India. So in this case, I call this as an import of service. So where is this point relevant? How is this connected? When you are finalizing your books of accounts, when you are doing your audit of an entity, look at your notes to accounts. In your notes to accounts, there is a clause with respect to money is spent in foreign currency, money earned in foreign currency. Money spent in foreign currency, I give a detailed breakup with respect to royalty, technical know-how, or purchase of import of some services, import of goods. All these transactions where money is spent in foreign currency, I draw attention to this import of service. As per section 5, levy of IGST, wherever there is an import of services, there's a notified person who has to pay tax on import of services on reverse charge basis. So for this particular clause, place of supply is something which is relevant for us to understand whether RCM has to be paid. Location of supplier. In the previous session, we have discussed at length why it is important to identify location of a supplier. Similarly, location of recipient. When there are multiple places, how we identify this recipient, this definition is important. Next, fixed establishment. I gave an example with respect to L&T Singapore, a branch operating as a branch, L&T operating as a different entity. So whenever you refer to this establishment, they say establishment is referred to a place other than the place of business, which has a characteristics of degree of permanence or having a suitable structure for human or technical resources. What? To receive such services for its own needs. So, in the example, what I was referring to, licensing office, coordinating office. My L&T branch happens to be a licensing office, which is called as a establishment. Next, moving on, intermediary. This term intermediary, very, very important. Again, one MCQ can be expected from this term called intermediary. There's a definition. When I come to section 13, I'll make you to understand in detail how we refer to this term called intermediary. Now, to start with, for goods, for domestic transactions, we are referred section 10. Similarly, for goods, inbound, outbound transactions, I refer to section 11. Please make a note in your running notes. Section 11 hyphen place of supply for goods, place of supply for goods for inbound and outbound transactions. Place of supply for goods for inbound and outbound transactions. Now, this section 11 is very simple and very clear, where it says goods are imported into India. When goods are imported into India, the place of supply shall be location of importer. When I import goods into India, identify the location of importer. That means the person who is responsible to file bill of entry. Under customs provisions, when we touch upon customs provisions, shipping bill in relation to exports, bill of entry in relation to imports. The person who is identified as importer, who files his bill of entry, shall be called as place of supply. Under DGFT provisions, Department of General Foreign Trade, importer has something called IEC, Importer Exporter Code. Importer Exporter Code. Students who are not familiar with indirect tax provisions, in the course of 3 years articleship, with respect to the inbound, outbound transactions, imports and exports, we generally refer to something called IEC. IEC is a code like PAN. It's a unique identity number which is given by the DGFT. This is under Foreign Trade Ministry. So this DGFT, which gives IEC, similar to your income tax provisions, attaching your Aadhaar with PAN, under GST laws, under DGFT provisions, every IEC where there is a GST number of an importer, this IEC gets connected with GST number. So what if I'm a registered person in 5 different states having one PAN. So if I have 5 GST numbers, under this IEC, I'll have different GST numbers. So when you log into this IEC, this DGFT portal, you have IEC specific login. You will see all your GST number added. Like we need to manually add. There is no auto fetching mechanism. I have to add all my GST numbers to that particular IEC. So what is the purpose? Why is this import? Why is this IEC relevant? I'll come with an explanation. Let's take example of, say, there is a entity called Mrs. ABC Limited who manufacture, say, let's take example of automotive components. This ABC Limited happens to be a subsidiary of a parent company, say Japanese entity. This entity supplies its goods they supply to, say, Maruti in Gujarat and, say, Honda in Karnataka, and also, say, uh, your Toyota in Tamil Nadu. Now here, this entity have state-wise various operations. So this is into tires and tube. This is into plastic components. And this is engine clutch assembly. Now, it is very common that every entity who's into manufacturing activity, they try to focus that activity in a specific state. They don't replicate the same activity into different state unless they require it for some administrative reasons. Based on the customer, based on the requirement, they set up their manufacturing activity. Now, here, IEC is unique for entity level. And I have GSTN for state 1, GSTN for state 2, GSTN for state 3. So when I import the goods, what I will do, I'll give IEC as imported to the customs authorities. And also I have various GST numbers attached to that IEC. So when I import the goods to this state, I'll give that particular state GST number. Now what happens here? There is something called ICE gate. There's something called GSTN. ICE gate is a portal operated by customs authorities. GSTN is a portal operated by GST authorities. All my import transactions will reflect in this ICE gate. On the basis of bill of entries I file, this data automatically flows into my GST portal. Now, this is bridging automation between one data to another data. Students, for your kind information, 10 years back, 15 years back, all the data used to reside manually. When I say 15 years back, there was no automation. Every state go with the physical papers, file bill of entry, get the documents, avail the input tax credit under central excise, where when the audit happens, you used to provide this physical paper to the customs or excise authorities. Slowly, 10 years back, there was an automation. Instead of bring a physical bill of entry, there was an automated bill of entry. Now, the day you are studying for your examination, everything or almost all, there was an integration of each of every data. The customs data is automatically flowing into GST data on the basis of my GST number. So here, the provisions say that in relation to import, the location of importer, that means to say, where you have declared that this is your GST number, this is your address, that shall be your place of supply. Based on that, the distribution of tax between the union and the state happens. Settlement as per your article 269A as a nexus with this particular provision. Next is your exports. Exports from India shall be location outside India. So here, like we have discussed the definition with its grammatical variations. The moment goods are taken out of India, I call that as export. So for the purpose of this export, place of supply, the place where the goods are dispatched shall be called as your place of supply. Reference to section 7, interstate supply, where we say supplier is in Karnataka, the goods are dispatched to Germany. I call that as interstate supply. When it is an interstate supply, none of the states, none of the union territories have a right to levy tax. Who has a right to levy? The central government, that is the Union of India. So this is how Article 269A, read with this section 11, gives me a clarity how to determine place of supply for imports, how to determine place of supply for exports. Any doubts so far before we start with the services? Any doubts? Great. As of now, no doubts. And students, I'm giving these examples as simple as possible so that you can connect these provisions with your institute material and also to present in your examination. Next, moving on to section 13, very, very important. Determination of place of supply for cross-border transactions. We come and examine place of supply for services where either refer to this term or supplier or recipient. Whenever there is a service, there are two parties. Supplier of service, recipient of service. Either of these two parties is outside India. So, whenever you come across this transaction, supplier or recipient, either of these two parties is outside India, you fall back to this section called section 13. For what? For identifying what is my place of supply, right? So starting point is clear. I have two parties. One of the parties outside India. Now, as per section 12, we have a general rule. We also have a general rule under section 13. What it says: examine the services right from section 3 to subsection 13. When you look into section 13, I have list right from section 3 till subsection 13. List of services are given. Look at those lists. If you don't have your service enumerated in any of those lists, then come to this general rule, subsection 2. The place of supply shall be location of recipient. Location of recipient. So, in simple, they say, either of the party is outside India, look at the recipient. On record, you have the location of recipient, then that shall be your place of supply. So what if I don't have the location of recipient? In that case, my location of supplier shall be place of supply. So the law says, look at your list of services. I'll give an example. Let's take example of a accounting service. As a professional chartered accountant, when I have given this accounting service, I look at entry 3, 4, 5, 6, so on and so forth till entry number 13. Entry number 3 till entry number 13, I don't find any of those services giving a affirmative answer that accounting service is classifiable under these entries. What will I do? I'll come to this general rule called subsection 2. Here, I'll say, if I know that this client of mine has the location out of India where address exists on record, then I call place of supply out of India. So what if client is ready to make the remittance in foreign currency, but client is not willing to reveal his place of residence? In that case, place of supply happens to be the place from where I'm rendering my services. For a moment, I'm a chartered accountant in practice. I have my office in Rajasthan. I have registered myself with a particular portal, freelancing portal, where I have been given accounting services. For this accounting services, I get per hour, say $100. This $100, when I receive money, my customer says, look, I cannot reveal my identity. I cannot reveal my address. I have to keep it confidential. In that case, the place of supply happens to be Rajasthan. Service provider is in Rajasthan. Place of supply is in Rajasthan. I call that as a intra-state supply. Though the recipient is outside India, though money is received in foreign currency, by virtue of place of supply, it cannot be called as export of service. Are you clear with this general rule? Students, this is the starting point. As we go, the complexity increases. If you have any doubts in this general rule, let me know your doubt. Kaushiki is asking this question. Is GST applicable on exports even by CG? What is that CG, Kaushiki? I'm not understanding that CG. Okay, you have mentioned clear. I think it's crystal clear. No doubts, indication that it is the concept is clear or concept is completely confusing. But since there is a response, I take it for granted that you are understanding the provisions. Is GST applicable on exports even by central government? If central government is rendering services not in the capacity of a public authority, then it is a taxable activity. For examining the exports, we have to refer to this section 2, clause 6, where the list of 5 activities are given, Kaushiki. Every entry, you get an affirmative answer, then yes, it's an export of services. Then, section 13, subsection 3. This section, that is subsection 3, entry number 3, it says that services are supplied in respect of goods which require to be made physically available. Now, I have rendered services for what? On or in relation to goods. When I say goods, it could be inputs, it could be capital goods. To render these services, those goods are to be made physically available. Now, I'll give an example. Say, I have exported a semiconductor. Say, recently there was a news that Adani Group is setting up a semiconductor plant in the state of Gujarat. There is a panel board developed using semiconductors. This panel board has been exported to the customer in Singapore. Having exported the goods, the customer raises a complaint that, Praveen, this panel board has a malfunction. Now, I cannot examine this panel board in Singapore, lack of my manpower in Singapore. At the same time, I cannot send my engineer because there is a trial, there is a research which is required. I will call back that panel board into India. Now, look at this entry. Services are supplied in respect of goods. What is it I'm doing? I'm doing a testing activity. I'm doing a repair activity. For what? Or a panel board, which requires physically made available for me to give that services. When services are provided from a remote location by way of electronic means, place of supply shall be location where such goods are available. Such goods are available. So here, I can undertake when the goods come into India. Sir, rather, let's do this way. Let me do a remote testing. Like there is an advancement in technology. I don't want to bring that semiconductor back into India. If I bring into India, again, I have to pay customs duty, claim duty drawback when I send it back out of India. For various administrative reasons, I'll do it this way. So let me do testing remotely by way of electronic means. What I will do, I will connect through internet. I'll say, please press this button, and see how the performance is. I'll have some various test reports. I'll download the test reports. I'll run a program. Again, I'll say, switch off the engine. Again, press it. Again, do the testing. So I can do this activity even remotely. Please understand, what am I doing? I'm performing on these goods remotely. So option 1, bring the goods. Option 2, don't bring the goods. Rather perform remotely on those goods. Law says, goods are imported temporarily into India for the repair activity, for undertaking treatment or process. Then the goods, if sent back, if those goods are sent back without putting to any test or any put to use in India, in that case, the place of supply shall be location where the goods are located. In case of remote activity, where the service is performed. Now, scenario number 1, if I'm doing the service activity in India, since the performance is in India, my place of supply shall be that particular state where I have done the performance. Rather, I do the testing activity remotely outside India. Then place of supply shall be location where the goods are available. In this case, if the goods are available in Singapore, place of supply happens to be Singapore. I'll give an example. I'll come to my Excel file to make it more clear for you. Section 13. Where this place of supply is on performance on the basis of performance. Scenario 1, goods are made available to the service provider Scenario 2, performance, or I would say testing done remotely. Now, let me take an example. Supplier and recipient. Now, supplier is in taxable territory, recipient out of taxable territory. Students, please understand, when we talk about this provision, one of the party, either the supplier or recipient, should be not in India, right? So, place of supply. Now, when goods are rendered, when this services are supplied in relation to goods where the goods are physically to be made available. Now, since the supplier is in taxable territory, my place of supply happens to be taxable territory. Since my supplier is in taxable territory and the services are performed in taxable territory, my place of supply happens to be taxable territory. Is this provision clear for all of you? Is this provision clear? Before I go to the expansion of this example, so far explanation with respect to services performed, are you clear? Great. Thanks for the confirmation. Now, sir, what if In scenario 2, in scenario 2, services are done remotely, and this service provider is in taxable territory. Recipient of service is located in outside taxable territory. Because the goods are outside taxable territory, place of supply shall be outside taxable territory. Scenario number two, because goods have not come into India, since the goods are located in the out of taxable territory, I have done testing remotely through electronic media. It shall be called as testing out of taxable territory. Hope scenario 2 is clear, students. Hope scenario 2 is clear for you. I'm going step by step before the complexity increases. Clear, great. Now, coming back, scenario number 3. Scenario number 3. Goods are now. Scenario number 3. Goods are made available to the supplier. Those are physically made available. Imported for testing and sent back without put to use. Now, this is a change point. In scenario number 1, goods have come to India. I have done the testing activity. Since I have done the testing activity in India, they say that this performance is done in India. It should be called as taxable territory. Scenario number 3, goods are brought into India for the purpose of testing, and before put to use, it has been sent back. Now, what is the provision say? Now, in scenario number 3, when goods are temporarily brought into India for the purpose of repairs and without being put to use, then place of supply, instead of performing, place of supply shall be deemed that it has been performed out of India. Just give me a minute. Let me come back to your Excel file. Students, just give me a minute. There is a problem with the Excel file. It's not responding. Just give me a minute. Let me reopen and great. Now, yeah. So in this case, my place of supply shall be outside taxable territory. The provision says that, look, the goods have come to India. The service was done on the goods. The goods have been sent back without put to use. Because the goods are going back to the recipient outside taxable territory, I consider place of supply as outside taxable territory. So here, the catch here is without put to use. The term without put to use is important. So now, practically, you will have a question. Sir, how do I know, or how does someone know the goods have been brought to India, testing was done, and without putting to use, the goods have been sent back? I would mention that this is applicable in those cases where manufacturer was sent the goods out of India, where there is a warranty or where there is a complaint from a customer. Those goods were brought into India for testing, for repair, and again sent back out of India. Those are the cases where this section 13, subsection 3, testing or performance is done on goods without being put to use, sent back out of India. Then my place of supply shall be outside taxable territory. This is the point under section 13 which we have to understand. Scenario 1 vis-a-vis scenario 3. Are you clear or do you have any doubts? Let me see if there are any doubts. Scenario 1 and scenario 3, Kaushiki, the thin line of difference, put to use. Scenario 1 doesn't talk about put to use. Scenario 3 talks, it was not put to use in India. And practically, when a department audit happens, or if you happen to conduct the audit, you will ask the client, prove that these goods were not put to use in India. How do you prove? So this evidence is something which is important. So if you ask that question, I'll draw your attention to something called duty drawback. Under customs law, we have duty drawback provisions where I have to prove to the satisfaction of the customs officer, saying that, sir, I have imported this material. This is the description. This is the quantity. And this material, I'm sending it back in this fashion. There was no change. There was no value addition. There was no change in the description. When I satisfy those provisions under duty drawback, I will establish this put to use concept, right? Now, so how do you get answer to these questions? When you read customs provisions, when you read GST provisions, connected, you will get an answer to these aspects. Let me come back to section 13. Now, section 13 has got one more element called performance-based, where services are supplied to an individual, which require the physical presence of the recipient. Now, these services are rendered to an individual or a representative of an individual who comes in person, or such representative is made available in person. I'll give an example. In this case, the provision says that where the services are performed, that shall be the place of supply. Let's take example, hair stylist, beautician. If at all, there is a services of a beauty hair treatment is required. Say there is a movie artist. This movie artist wants a particular specialist. Say this artist happens to be from India, recipient in India, and this service provider happens to be a expert from, say, USA. So either the recipient has to travel to USA for hair transplant, or that expert from USA has to travel back to India. This is example number 1, where the recipient has to be physically available with the service provider. Example number 2. Let's take an example of, the property consultation matter. Say, I am a legal advocate, or I'm a professional on property matters. Say, Mr. X, who happens to be an individual, happens to be a resident of USA. He had an ancestral property in India. He wanted to dispose that ancestral property. To get that property matters advisory service, this X has to come to India at the time of disposal of property. So when the property is being disposed, visiting to registrar office, getting the formalities from the income tax department, for getting PAN, for getting lower deduction TDS certificate, or remittance of taxes or filing of returns. Here, the individual may come independently or he may send his authorized person. So all these cases, they say, when services are rendered to an individual where physical presence is required, then the provision says where the performance is done, that shall be your place of supply. If the performance is done in Singapore, place of supply happens to be Singapore. If the performance is done in India, then place of supply happens to be India. Example. Say for a moment, Shah Rukh Khan, we have this one latest movie. What was that movie? I don't remember. There was one recent movie, lead role by Shah Rukh Khan. See, he has to reduce his weight by, say, 20 kgs. He has to have a new look. For that particular purpose, he may travel to USA or expert from USA may visit India. So what if the expert is visiting to India, where the activity is performed partly outside taxable territory and partly in taxable territory? Then the provision says that because a portion of service is performed in taxable territory, place of supply happens to be taxable territory. Now, this is a catch here. The GST lawmaker doesn't want revenue to flow out of India. Part of the services rendered, if Shah Rukh Khan gets entire treatment in Singapore, place of supply happens to be Singapore. If that professional comes to India, then say 10% of services in India, 90% in US. The provision says 100% of that activity shall be deemed that place of supply shall be taxable territory in India. So what if the services are performed at multiple locations in India? How do we identify the place of supply? Then whatever we have discussed in section 12 with respect to the number of days spent in a state, the number of hours spent in this particular each state, that should be the basis how we determine place of supply, right? So this is the basis how we identify my place of supply. Let me see if there are any questions. Dhruti is asking this question. In scenario 1, where the goods are put to use. In scenario 1, where the goods put to use after testing. Dhruti, if I do the testing activity and I send back the goods to the customer and the goods are put to use in Singapore, then place of supply happens to be Singapore. Rather, this goods are tested or activity services rendered in, say, Karnataka. Testing is done in Maharashtra. After testing, the goods are put to use. The goods are put to use in Maharashtra. Then goods are sent back out of India. Then they say the place of supply shall be the place where performance is done. I will not refer to outside taxable territory. Since the performance, the testing is done where the service provider is there, that shall be the place of supply. Where the actual testing is done, that has no nexus. Instead of saying outside taxable territory, it shall be taxable territory. Now, what is taxable territory? Where the service provider is located, where this testing is done, that shall be the place of supply. Hope I have clarified your question, Dhruti. Good. Students, we are at 7:40. Let us have a quick break of 10 minutes. 7:50, 7:50. Let us resume back with our discussion. discussion. So there is one question. There is one question in the question window. Chirag Agarwal. Chirag is asking this question. If a doctor from outside India comes to India, gives weight consultation services to India person, Section 12 will apply or Section 13 will apply? Good question, Chirag. For benefit of doubt to all other students who are listening to me, please understand. Section 12 is applicable in relation to domestic services. That means both service provider and service recipient are in taxable territory, right? I repeat once again. Section 12 is applicable, that is in relation to domestic services, where service provider and service recipient both are in India. If one of the party is not in India, then Section 13. So, Chirag, to answer your question, if one of the party is not in India, Section 13 will gets applied. If you ask further, say what if both are not in India? So, good thing, neither 12 nor 13. Like no, because service provider in USA rendering services to a customer in Singapore, nothing to do with Indian GST law, right? That's how we are understanding. So Chirag, hope I have clarified your doubt, right? Okay. Now, let me come to my Excel file to explain you few of the provisions connected with part of service performed in taxable territory. I'll say this is a case where Rule 6 comes into picture and Rule 7 services performed in one more than one state or union territory. Now, students, when we are examining this place of supply, please keep in mind, Section 13, when we are applying the provisions, one of the parties out of India, which is very easy to understand. And how we identify place of supply is also clear. But the issue comes here is, so what if part of the performance is in taxable territory? Example, services of hair transplant done in, say, Singapore, USA, and I'll say Delhi. Now, service provider, like here, performance based shall be the place of supply, right? Say a customer who gets the hair transplant, he gets this treatment partly in Singapore, partly in USA, and partly in Delhi. And for a moment, if we assume service provider is in India, then entire this place of supply shall be taxable territory, that is Delhi. So here, breaking the chain. When you're examining your place of supply, if all along your services are out of India, that is outside taxable territory, nothing to worry. Even if 1% or even some portion of the service is performed in India, then the place of supply happens to be taxable territory. This is what Rule 6 mentions. So Rule 6 says that catch hold of that service if the performance happens to be in India or in taxable territory, then please come to opinion that place of supply happens to be taxable territory. Next, Rule 7. So what if my services are performed in more than one state, more than one union territory. That means to say, services are rendered, services are performed, say US, then say Singapore, and say Kerala, Tamil Nadu, and Maharashtra. Now, Rule 6 says that since a portion of services are rendered in taxable territory, my place of supply happens to be taxable territory. So far, so good. So what if the performance is done in multiple states? Then this Rule 7 says that look at the agreement. If the agreement says on the basis of value, like Kerala, based on number of man days, based on number of hours, based on number of hours agreement. If there is an agreement, please go as per the agreement and identify the place of supply for each state. So what if there is no agreement? Then principles of generally accepted accounting principles. You derive a formula as per the generally accepted accounting principles. Please adopt that for your place of supply. Right? So keep in mind, when we're talking about place of supply, right from Rule 3 to Rule 5, examine applicability of Rule 6 or Rule 7. So this is one catch point we need to understand when we are studying the place of supply provisions. Is this explanation clear, students? Is it so far so good? Do you have any doubts? Is this clear? Okay. Now, Kaushiki has a question. When we are applying Rule 6, for part consideration, proportionately or full consideration. Now here, one of the activities done in taxable territory, Kaushiki. For that reason, entire consideration, we will say, for rendering this service, this happens to be my taxable territory. Like Rule 6, generally there will be one state or one union territory. Entire that activity shall be attached, shall be revolving with that particular place of supply. That's how we look. Now, extension of your question, Kaushiki, Rule 7. So when you have, say, 1 lakh rupees, the service is performed in 3 different states. So how do we identify that 1 lakh to state 1, state 2, state 3? Answer for that, look at your agreement. If this 1 lakh can be identified for state 1, state 2, state 3, maybe on the basis of number of man days, number of hours spent, based on the distance or kilometers covered, or as per generally accepted principle. Based on that, you identify place of supply. So this is answer to your question, Kaushiki. Hope I have clarified your doubt, ma. Let's move on. Now, this Rule 6, Rule 7, this is what I have explained. Now, this place of supply for immovable property. Now, this immovable property, as we have studied for domestic services, Same funda is applicable even for immobile property. Generally, please keep in back of your mind where the immobile property is located or where that immobile property is intended to be located. That shall be your place of supply. Now, there was one question from one of student in the previous class. So how do we understand or what is the meaning of this term called intended to be located? Intended to be located. If there is a building already existing, if I have to do repair activity, if I have to do development to the existing activity, I can refer to that property as called immobile property. So what if the property is not there, a barren land is there, now I have to erect or I have to do a construction activity. So I, as an architect, when I give a structural design, when I give drawings for construction activity, this drawings is for that intended immovable property. Intended, there is no property. A property is going to be constructed on the basis of structural drawings which is being extended. That is how we interpret this term called intended to be located, intended to be available, right? So section 13, subsection 4 refers to all the services in relation to immobile property. What does it say? Services offer experts, estate agents, experts, your architect, design, interior designer, structural engineer, builder, contractor, estate agents, the agents who are connected with the property sale. Supply of accommodation in relation to immobile property, where accommodation is provided in a hotel, in guest house, or this boat, campsite, etc. Grant of right to use immobile property or carrying out a construction work in relation to immobile property. For all these cases, the place of supply shall be the place where such immobile property is located. Next. This section 13, subsection 5 is a combination of section 12, subsection 6, section 12, subsection 7. If you recollect section 12 with respect to domestic services, we had discussed admission to a cultural event, artistic, sporting, educational, or an entertainment event. Similarly, organizing an event in relation to cultural activity and all. In section 12, that is domestic services, we had two separate interests. But when it came to section 13, both were combined together. The reason why it was done this way, when we looked at section 12, there was personal in nature for admission, where location of such property was relevant. When I look at organizing an event, the services rendered to a registered person was important. So when I render services to a registered person, where that person is registered, that is important. But in case of this cross-border transactions, where one party is part of India, registration is not relevant. For that reason, my entry is under section 12, which talks about this admission or organizing. They have clubbed together under entry number 5, where they say all activities in relation to this cultural, artistic, sporting, scientific, or conference, exhibition, etc., etc. The place where that event is held, that shall be relevant. That shall be my place of supply. I'll give an example for you to have a better understanding. Admission or conducting organization. Let's take an example. So there is a trade exhibition conducted by, say there is one Chamber of Commerce. Let's take, say, Bombay Chamber of Commerce. Bombay Trade Chamber of Commerce conducts a trade exhibition where all business persons across globe can participate. Now, so there are service recipient, service provider, and section reference. Then place of service provider, Bombay Chamber of Commerce, say, registered party in Maharashtra. Service recipient, say Mrs. ABC Limited, registered in Karnataka. I call this as scenario. Scenario 1, scenario 2. Say service provider, same party, Mrs. GM PQR GmbH, service recipient from Germany. Now, in scenario number one, service provider is a registered person in India. Service recipient is a registered person again in India. Will I apply section 12 or will I apply section 13? What would be your answer? Also, please give your answer with respect to place of supply. What shall be place of supply? What shall be place of supply? For scenario number one, with respect to organizing a trade event, what shall be the section we refer and what shall be your place of supply? Fantastic. Dhruti says section 12. Govind says section 12. Good. So here, since both the parties are in India, I draw reference to section 12 for identifying place of supply. Under section 12, I travel to subsection 7. So when I travel to subsection 7, if the services are rendered to a registered person, the place of supply should be such place of a recipient. Since the company ABC Limited is registered in Karnataka, my place of supply happens to be Karnataka. My place of supply happens to be Karnataka. Kaushiki, why Maharashtra? Why not Karnataka? Look at your section 12, subsection 7, where it says, if services are rendered to a registered person, the place of supply shall be location of such person. Reason, your nexus theory, consumption-based taxation, right? Good. And for scenario 2, Kaushik has given an answer. Chirag, look at this carefully. Supplier is in the state of Maharashtra. Place of supply happens to be Karnataka. Now, what is the nature of supply? My service provider is in Maharashtra and my place of supply is in Karnataka. Service provider is in one state, place of supply is in another state. It happens to be a interstate supply, right? It happens to be a interstate supply. So it's not SGST, CGST, Chirag. It should have been IGST. Hope this is clear. Good, I can see answers flowing. Absolutely don't feel bad. Right or wrong, please make an attempt. This is the way you test your knowledge. Great. And Dhruti has given answer for scenario 2. Even Kaushik also has given answer for 2. Let us examine and let's come to this. For scenario number 2, service provider is in India. Recipient PQ GmbH is a recipient from Germany. Service provider is like one in taxable territory, other out of taxable territory. I draw attention to section 13. And since it is in relation to conducting an event, I refer to section 13, subsection 5. Section 13, subsection 5 says where the event is actually held. Since the event is held in Maharashtra, my place of supply happens to be Maharashtra. Both Dhruti and Kaushiki. Kaushiki says for scenario 2, section 13, answer is correct. Place of supply, Maharashtra is also correct. Dhruti, scenario 2, I will adopt section 13. Place of supply shall be the place where event is actually held. Since the event is being held in Maharashtra, it is not Germany. It should be Maharashtra. Is that clear, Dhruti? Great. And what should be the nature of supply? Service provider is in Maharashtra. Place of supply is Maharashtra. I'll call that as a intra-state supply. I'll call that as intra-state supply. Food for thought. When you do internal audit, when you do GST audit, please look at each transactions where there is a applicability of section 13. Wherever you see the recipient is not a registered person, examine the place of supplies with the intent how it has been framed. Hope these both scenarios are clear, students. Great. Now let's move back to section 13. Yeah. After section 13, now, as I have explained, rule 6, rule 7, rule 6, rule 7. These two rules are guiding factors with respect to subsection 3, subsection 4, subsection 5. Sorry, I've said rule 6 now. It's not rule 6, it's subsection 6, subsection 7. Let me just correct this. It's not rule, it is subsection. Subsection 3 to subsection 5. Examine applicability of provisions of subsection 6 and 7. I correct this reference of rule. It's not rule, it is subsection. Now, wherever we look at the 3 services, subsection 3, it talks about performance-based services. That means services rendered on goods. This subsection 3 has second entry. Services where physical presence of an individual in individual capacity or a representative of that individual is required. So that is subsection 3. Subsection 4 is in relation to immovable property. Subsection 5 is in relation to conducting or admission of an event in relation to education, culture, artistic, education, scientific. In these three subsections, I see whether there is an event, whether there is an activity done in taxable territory and part outside taxable territory. If that is the case, entire my place of supply happens to be taxable territory. As per subsection 7, I apply my principles of the contract for splitting the value among various states. That is what I was referring to in this my presentation. Students, please keep in mind, this presentation is just to make a ease of understanding of the provisions. This presentation should be supplemented with a basic study of institute material. And if you ask what you have to refer, please fall back to your institute material. And if you go to your Board of Studies section, there is a section to download your material. ICA Board of Studies have compiled the recent amendments applicable for May 2023. Each topic wise, they have made provisions enumerated with examples. Download that PDF. 175 pages are there in that particular material. That particular material will be a reference for testing in your examination. Some portion, some weightage of your 100 marks will cover those recent amendments. The compendium which is there on Board of Studies website, I would recommend download and read that material. Reference to MCQs, again, there is a compendium. Reference to practice questions. Board of Studies has chapter-wise independent individual questions. Please read through every session. Once you finish this learning, go back to the chapter, the institute material that supplements this discussion with examples. So, right, that is expected once you listen through this online classes. Moving further, we have discussed subsection 3, 4, 5. These three subsections have connected subsection 6, subsection 7, where if part of the service is rendered in taxable territory, part of the service is rendered in more than one taxable territory, where subsection 7, subsection 8 we have discussed. Moving on from there to subsection 8. This subsection 8 is in relation to services provided by a banking company, financial institution, non-banking NBFC to account holders. So this subsection 8 clearly says that whatever list you see here, where the service provider is located, that shall be the place of supply. I repeat my point. Wherever services are rendered by the services or service provided mentioned in this entry, my place of supply shall be location of such service provider or the supplier. Now, in relation to services of a bank, financial institution, NBFC, to its account holders, they say that the place where the bank is located, that shall be place of supply. Let me give one example. Section 12, subsection 8. Services of income. Let me take this party. There is one example of Andhra Pradesh. L&D. Say AP government have appointed this service provider called Hitachi from Singapore, who is expert in structural design, and AP government has awarded a contract, say worth 150 crores. Now, AP government says, please extend your services for giving advice in relation to structural design. Value of the contract is 150 crores. Now, AP government says at the time of awarding the contract, please execute a bank guarantee for 40% of the contract value. Now, my bank guarantee amount happens to be, say, in rupees and crores, 150 crores into 40%. 60 crores is the bank guarantee which is required. Now, for this bank guarantee, this particular entity approaches, say, State Bank of India, say Amravati. Now, State Bank of India says, look, I can give you a bank guarantee and the cost of the service is, say, 0.125%. Whatever 60 crores is there on that, 0.125% happens to be my bank guarantee. Or let me make a little clear, 15%. So 0.9 crore happens to be my service fee. Now, in this case, service provider is SBI Amravati. Service provider is Amravati, State Bank of India, Andhra Pradesh. Service recipient for the bank guarantee purpose happens to be Hitachi, Singapore. So service provider is in India, recipient is also India. Section 12 or Section 13? Definitely Section 13. Because one of the parties out of India, I apply the provisions of Section 13. When I apply Section 13, I come to Section 12, subsection 8. Sorry, I have written 12, it is 13. Excuse me for the typographical error. Because service provider is in India, who is service provider? State Bank of India. Service recipient is outside India. Provisions of Section 13 gets applied. Under Section 13, this falls under subsection 8. For the service of bank guarantee, this is a service fee. And this service fee is subjected to GST. So place of supply, this provision says AP happens to be the place of supply. Service provider is in AP, place of supply is in AP. This happens to be a intra-state supply. Because of intra-state supply, SGST AP, CGST AP shall be the charge on this processing fee of 0.09 crores. Are you clear with this explanation? Section 13, subsection 8. Dhruti, I stand corrected, ma. It's a typographical error, not 12. It should have been 13. While writing, I have erroneously referred to Section 12. Thanks for bringing that point to my knowledge. Is this explanation clear for all of you? Govind says clear? Okay, good. Let's come back to the provisions. Now, we know financial institution, we know bank, we know NBFC. And provision clearly says any services rendered to these account holders, any services rendered to these service account holders, it's the same place where service provider is located. Next, services of an intermediary. Services of an intermediary. Now, wherever intermediary is available, the services of intermediary shall be, the place of supply shall be place where such intermediary is located. Intermediary happens to be a agent, or you can call as a broker or a middleman. This intermediary happens to be a person who is connecting both service provider and service recipient. When this intermediary is connecting these two parties, these two parties know very well, that service recipient knows this gentleman is a service provider. At the time, service provider knows that this gentleman happens to be a recipient. I'll give an example where we can understand this intermediary very easily. Assuming for a moment, service recipient, I'm just giving a hypothetical example. Say service recipient Mrs. ABC Limited requires a loan for rupees 250 lakhs. Service provider Mrs. Banking Solutions Limited, who is into funding related activity. Now, intermediate, for a moment, let's assume Mr. X. So here, the provision says that X, this service recipient approaches X saying that, look, I'm in need of a fund for rupees 250 lakhs. Please help me to get this business loan. On the basis of this requirement, X approaches the service provider called Mrs. Banking Solutions. And on behalf of this recipient, providing documentation, explanation, support service, everything is represented by Mr. X. So finally, when this service provider is happy with the documentation, loan will be sanctioned. And this intermediary draws something called commission. What will happen? Service provider pays 1%, service recipient pays 1%. This 1% commission is earned by intermediary. So when you look at this transaction, students, the law says that wherever intermediary is located, who connects two people, service provider, service recipient, this connection is on account of services render. That shall be a intermediary, and in that case, the place where intermediary is located, that shall be your place of supply. Is the provision clear? Kaushik is asking this question. Amaravati is in Maharashtra or Andhra Pradesh? Kaushiki, there are two places. Amaravati is very well in Maharashtra, and also Andhra Pradesh. The previous government, Chandrababu Naidu, when he happened to be the chief minister of Andhra Pradesh, he has named a place near to Vijayawada as Amaravati. He wanted to name the capital city of Andhra Pradesh with a place called Amaravati. Unfortunately, after the change of government happened from Telugu Desam Party to YSR Congress, YS Jagan Mohan Reddy happens to be the chief minister. This Amaravati no more has been framed as a capital city. They wanted to bring three more different places, setting aside Amaravati. So there was some dispute. Nevertheless, let's not get into politics. When I was referring to Amaravati, Kaushiki, I was referring to that capital city which was passed by the parliament as a capital city of Andhra Pradesh. So I'm not drawing to that Maharashtra. I'm drawing to this new place called Andhra Pradesh. Hope that's clear, Kaushiki. Coming back. Point number C. Services consisting of hiring of a means of transport. For generally, we have this foreign tourist. Whenever a foreign tourist visits India, by the way, Section 15 of IGST Act as define who happens to be a foreign tourist. You have this cars on rent, then you have cars on wheel. Now, there are various private agencies who render this transport vehicles on rent to this foreign tourist. So wherever the services are rendered to this foreign tourist, which excludes aircraft and vessel, and the period of that hiring is less than 1 month, where the service provider is located, that shall be the place of supply. Let's take an example. So Mr. X, an individual from Singapore, visits to, say, Gujarat. This X comes with his family and he takes on hire, say, BMW on hire. And he's in India for a span of 15 days. Across his travel, less than 1 month, when he hires that motor vehicle for the purpose of transportation, the place of supply shall be the service provider where he is located. For a moment, this Cars on Wheels happens to be a place of business in Mumbai, Maharashtra. When he has taken the services in Maharashtra, across India, when he has traveled, the place of supply happens to be Maharashtra. That is how this subsection 8 has to be interpreted. Now, intermediary, this is one definition. MCQs, you can expect 1 mark question on the basis of intermediary. This means a broker or an agent or any other person by whatever name you call. Like you have this Arhaita, Del Credere agent. All these can also be referred to as an intermediary. Now, when we talk about this intermediary, most of the cases you come across this so-called marketing agents or you have this MBAs who have traveled extensively, who retired after 30 years of service, who join as a consultant. Those people whom I'm referring as intermediary. For a moment. Say take example of your Makino. Makino is one brand which is there across Asia Pacific. Or take example of Nerolac. Take example of Maruti. Take example of your KFC. Now, organizations, entities who have presence global, right? And a person who happens to be a vice president level, who works in various countries over a period of time, he retires from the company and continues to be a consultant. Those people who are engineers, who are marketing senior executives, those people give these services to entities in India, to entities outside India. They we refer to this term called intermediary. So this person who arrange or facilitate supply or goods or services between two or more persons, but does not include a person who supplies such goods or services on his own account. So wherever he draws commission, as I gave example of loan given by the bank, where he draws a commission where three parties are there: service provider, service recipient, and intermediary. Then section 13, subsection 8 comes into picture. Next. Section 13, subsection 9, subsection 10, with respect to transportation of goods, with respect to transportation of passenger services. So here, with respect to transportation of goods, they say the destination of goods shall be the place of supply. Please wait and watch for one MCQ. Wait and watch for MCQ. While drawing this particular transportation, they have excluded mail or courier. They have excluded mail or courier. For a moment, if DHL has a parcel, DHL is a courier agency. DHL picks up a box from a factory of a manufacturer in Haryana for dispatch to a customer in Japan, Tokyo. So when this transporter, I call DHL, picks the goods, destination, though it happens to be Tokyo, I don't draw reference to section 13, subsection 9. Rather, I fall back to section 13, subsection 2. So as per section 13, subsection 2, Who is the recipient? On record, who is the recipient? That shall be place of supply. Only other than mail, only other than courier, I refer to this section 13 subsection 9, where my destination of goods happen to be place of supply. Wait and watch for 1 mark MCQ on this section. Then subsection 10, with respect to passenger transportation service, the same. The point where embarking, the point where the journey of this passenger starts, that shall be your place of supply. So for a moment, Air India has outbound travel services. Air India picks passengers from, say, Bengaluru and reaches a place called Abu Dhabi. While returning back from Abu Dhabi, it arranges the transportation services. Any passenger who embarks in Abu Dhabi, service provider, Air India, is from India. Service recipient, all the passengers from Abu Dhabi. So the point of embarking happens to Abu Dhabi. Here, it will be called as place of supply outside India. That's how I understand my place of services in relation to transportation of goods, in relation to transportation of passenger services. Mail or courier, I have referred. Don't refer to this subsection 9, rather refer to subsection 2. Now, services on board, like we have the services on board under section 12, subsection 10. The same analogy was carried to here, where they say, any services which are rendered on board or conveyance, my place of supply shall be first scheduled point of departure. First scheduled point of departure. For a moment, see, this is a flight of Air India from Mumbai or from Delhi is to US. When the flight has to travel from India to US, first it will reach Qatar. From Qatar, it will have one more destination, then finally to US. So when the aircraft left India, the first scheduled point of departure happens to be Qatar. Any services rendered on the flight board conveyance shall be place of supply Qatar. So in that case, service provider is India, place of supply out of taxable territory, export of services, no GST. This is how I apply my provisions of subsection 11. Subsection 12, OIDAR. Before this, let me see if any questions so far. Dhruti has one question. When we are talking about with respect to this hiring of motor vehicle for transportation purpose, section 13, subsection 8, why is that aircraft and vessel are excluded from this entry? Aircraft and vessel. See, you have H, which is a small boat, small ship, which is meant for personal consumption. Aircraft and vessel generally will not be meant for personal consumption purpose. It will be for B2B purpose. If you refer this entry, section 13, subsection 8, Dhruti, the place of supply was the place where service provider is located. Intent of the lawmaker, if it is of personal in nature, look where the services are rendered, let that be taxed. In framing the law, I gave an example with respect to the bank guarantee given to Hitachi. There, Hitachi is going to consume that services for a work done in Amaravati, Andhra Pradesh. So the broad framework of law has been designed in such a fashion. What should be taxed in India? What should be not taxed in India? So it's a policy matter where they have analyzed various business models and they felt this aircraft, this vessel may not be personal in nature. Let us not link with section 13, subsection 8. If I detach 13.8, it travels back to 13.2. So that's the reason how the framing was done with respect to this entry. Chirag has this question where mail or courier outside India shall be covered in which section? I'll travel back to general rule, Chirag, section 13, subsection 2. If I fail to get an answer under section 13, subsection 9, I will travel back to section 13, subsection 2. General rule. This is how we need to understand. Hope I've answered your question, Chirag, and also Dhruti. Let's come back to online information database access retrieval services. I'll give a couple of examples before we dwell upon these elaborative OIDAR services. Online information database access retrieval services. You have, if you happen to travel back in time, COVID era, a lot of changes happened, a lot of operational mechanisms have changed. And this is one of the innovative taxing mechanism which was brought into GST well ahead of this change. Most of our lives, if you see, work from home was a concept which was never anticipated, which was brought into every life of a businessman. Most of us who have been working in chartered accountancy firm, right from COVID time, you have been given few cases to work from home. And post-COVID, even though we're all come back to normal life, this work from home culture is one thing which is continuing in our lives. Now, when we talk about this COVID work from home, we had this concept called cloud-based computing. Take example of your Google services. Google has come with a mechanism saying that, look, I'll give you 10 Gmail accounts free of cost. Every Gmail account, you will have 15 GB of storage space. Now, where is this storage space? There's one more service provider. Like there are multiple service providers, AWH, GMB. These service providers have this cloud storage mechanism. Where is this cloud storage happening? No idea where data is going to reside. It could be in India, it could be in Singapore, it could be in USA, it could be in Kenya, it could be in Malaysia. No idea. So here, the data was stored on a cloud through this internet service. Through internet service, they are making available this data. So what happened here? All your services, instead of office desktop based, was shifted to this cloud-based mechanism. So when I worked on this cloud mechanism, the connection medium was internet. Without internet, we cannot work on anything. On your desktop, on your office system, you have this funda called one desk. This one desk is one mechanism where the data is stored on your system for your visibility. But backend, this one desk through internet has a connection with cloud. Live the data streaming happens. Similarly is your Google Cloud. Google Cloud has a feature where a drive gets installed in your system. When you open that drive, it looks like it's a local drive, but the data which is residing in that drive is mirroring itself on the cloud. So here what is happening? I have information, I have data. This information, this data is connected by way of a modem called information technology, that is through internet. Over an electronic network, the services are rendered by Google to the recipient. Now, initially Google and Microsoft have come with a free version. Everyone started using this service. Over a period, the free version has been put to end. They have shifted to a payment mode With the minimal payments, these services are being rendered. Now, this is one theory, one side. Another theory, now, when this funder is in existence, there are service providers like you have this Google Books, Google Music, or Netflix. These are the service providers where they made the globe connected with the internet, where they say, look, you want to buy a magazine. You can import that magazine, physical version, read it. Rather, instead of that, you pay me a nominal fee of, say, $50 or $10. I'll give you a Google access where on my drive, on my database, by paying $10, you get a free downloadable version of print media, which is in an electronic form. Similarly, your Netflix. Sitting at your home, you can watch all the television, all the channels global wide at your home. This is the funda backed with OIDAR, Online Information Database Access Retrieval Service. So here they have said that in relation to OIDAR, the place of supply shall be recipient of services. If the services are rendered to a non-taxable recipient, then my place of supply shall be the place where such non-taxable recipient is located. Non-taxable online recipient. Non-taxable online recipient. Who is this non-taxable online recipient? Look at the terminology. Non-taxable online recipient. You and I, as an individual, assuming we buy the subscription of Netflix, there is a package called, say, 150 rupees per month. I, as an individual, I'm a non-taxable person. Why? I'm not using it for my business purpose. Non-taxable, online. I prefer to avail these services. I'm a recipient. So, an individual who uses that service, not for business or commerce, can be called as non-taxable online recipient. In addition to that, the government, central government, state government, public authority, all these local authorities are also called as non-taxable online recipient. Now, if government doesn't lay hands on this business model, there will be a siphoning of funds from India to overseas business people. So here, the government says, look, let me tax this entity called OIDAR. First and foremost, Section 13, where service provider who happens to be this OIDAR, like Netflix or Google or Microsoft, though these entities have their presence in India, if at all this render these services through internet modem, through electronic modem, then they will be called as a service provider. So I have a service provider in non-taxable territory. I have an online non-taxable recipient, you and I, or these government authorities who are called non-taxable recipient in India. Provisions of Section 13 gets applied. So by virtue of this, my place of supply happens to be taxable territory. Since the recipient is in taxable territory, my place of supply is recipient of services. Now, online database information retrieval services says location of address presented by the recipient of service through internet is in taxable territory. The credit card or debit card or the card through which the payment is done is again in taxable territory. Billing address happens to be in taxable territory. They have given list of conditions. In those list of conditions, any two non-contradicting conditions are met, then place of supply happens to be the recipient. I make the payment through banking channel. If that payment of a banking channel is in taxable territory, country code, subscriber identity When I say country code or subscriber identity, generally you refer to this Netflix. When we log into Netflix, it asks for country code and a mobile number. If I type 91, my country code happens to be India. If I type 31, it happens to be other than India. So based on your country code, they determine whether you are in India or out of India. The location of fixed landline. If I obtain the services through a fixed landline, again, this happens to be a taxable territory. So this provision says that any of these 6 conditions are met, then I presume that this OIDAR is a taxable person. This OIDAR, as per the provisions of section 14, he should register as OIDAR, or he can very well appoint an agent on his behalf to pay the taxes. So what would be the nature of tax? What would be the nature of supply? Because I am referring to section 13, definitely Article 269A, it shall be an interstate trade or commerce. IGST comes into picture. I don't know how many of you have done the audit of this online cloud services. When you have this OneDrive or Google Cloud Services or your Microsoft subscription, all these services which is connected with this database support, they charge something called IGST. And these service providers have one registration across India. Section 14 talks about this OIDAR way where the law is very simple. Come, declare yourself as OIDAR. You will have one registration across India. You yourself can take registration, or you can appoint your agent and let that agent pay the tax for these services rendered in India. Now, connected with this, there is an entry called section 13, subsection 13. 13, subsection 13. This is a well forethought provision. This is a provision to put an end to litigation for the services which were not anticipated, which may crop up at a future point in time, where they say, in order to prevent double taxation or non-taxation of certain supply of services, and for the purpose of uniformity in application of these particular services, government has formulated, or government has a power to formulate certain services. Government has a power to notify certain services. The description of those services or those circumstances in which the place of supply shall be the place of effective use and enjoyment of a service. The purpose of this is effective usage and effective enjoyment. Now, this ancillary entry provision is indicating that, look, there could be some services which we could have envisaged at this point in time. Over the advancement in technology, if any services come, I take a liberty to notify those services. And once I notify services, I'm going to say the place of supply is on the basis of a cardinal principle called effective usage, effective enjoyment of a service. For a moment, Remdesivir, Pfizer, when COVID has affected or COVID has been declared as pandemic, Pfizer has been conducting drug trials. Now we have something, one entity called World Health Organization. This World Health Organization has not given their permission to formally say Pfizer is a drug for COVID. So what happened? Pfizer has sent some dosage of drugs for testing in various nations. As you're all aware, this clinical trials generally will be done on animals. Over a period of advancement, then it will be done on human beings on the basis of their acceptance. And when that test run is done by these clinical establishments, this is by and large consumed or tested in a particular nation. That particular services, the entry under subsection 13 says, look, I am going to define, I'm going to notify, and I'm going to tell what is the place of supply. So this is the purpose of my entry number subsection 13. So as on today, this entry has notified integrated discovery and development, evaluation of the efficacy of a new chemical, biological entities, animal bodies, evaluation of biological activity of novel chemical, biological entities in vitro assess, metabolism of new chemical entities, safety assessment, toxicology, stability studies, bioequivalence, clinical trials, and analytical studies. These are all the notified list of services under section 13, subsection 13. So the government says, look, if you are into a business of these particular entities and you are a service provider in India, for a moment, Ranbaxy. Ranbaxy is into this evaluation, and Pfizer is registered in Germany. Section 13, one of the party, service provider is in India, service recipient is outside India. So when these two cases are met, I look at section 13. When I look at section 13, these activities are carried out in India, where this entry was evaluated in this thing. Look, I have met two conditions. Service provider is outside India or service provider is in India. Recipient is outside India. In those cases, on the basis of this effective usage, on the evaluation of clinical trials being done, for all these notified services, the place of supply, they say not outside India. Place of supply is the place where these clinical tests are being performed. So this notification 4 of 2019 is one notification. When you look this material given by Board of Studies, they have notified all these services doesn't satisfy requirements of definition under entry number section 2, clause 6. Entry number 2, clause 6, there are 5 requirements for export of services. The third entry where the place of supply should be outside taxable territory. For these notified list of services, they say the place of supply is not outside taxable territory. This is what they have mentioned with respect to entry number 13. Let me see if there are any questions before we get into MCQs. Then, Kaushiki is asking this question. First point of departure is not. It should be India, Delhi, from where it starts. Okay. I stand corrected this point of discussion. The first point of departure is where this onboard journey, continuous journey, Kaushiki, when we talk about embarking on a journey, that's where we start with. Consumption of services, the first point of departure. So in case of this Air India, flying from Delhi to Qatar and Qatar back to Delhi. So when you talk about passenger transportation service, embarking is a point of supply. In case of services on this flight, the first point of departure shall be my place of supply. So this is how I interpret this entry number 12, subsection 9, entry number 10 with respect to services. Next, Chirag is asking this question. Access to online classes through the use of internet can be called as OIDAR. It can be called as OIDAR only where the service provider is not in taxable territory. For a moment, Chirag, say Tax India Online, or Taxman. Taxmen or Tax India Online are entities registered in India. They provide internet access, the access to income tax, access to company law, access to indirect taxation. This Tax India Online or Taxmen are entities rendering services, online information database access by virtue of internet modem. But for the purpose of this entry number, section 14, they are not service providers out of India. They are the service providers well within India. I'll not refer to section 12, section 13. I'll refer back to section 12. This is the answer to your question. Then Kaushik is asking this question. If recipient is non-taxable, section 13, subsection 12 will not apply. If the recipient is a non-taxable online recipient, section 13, subsection 12 will be applicable. When I'm talking about, okay, let me understand this question this way, Kaushiki. Based on your question, if my understanding is correct, let me answer this way. Say, Netflix USA is a OIDAR. Netflix USA has given the access to this Netflix to Mr. X, who happens to be a resident of USA. Then this Mr. X will be a non-taxable recipient. Not as per GST law, he is a non-resident of India. So when service provider is outside India, service recipient is outside India, I don't even refer to this GST laws. So when do I refer to the GST laws? For that purpose, you have to refer to one definition called section 2, clause 16, where there is a reference called non-taxable online recipient. Means government, local authority, government authority, an individual or any other person not registered and receiving online information database access or retrieval services in relation to a purpose other than conference, industry, commerce or industry, or any other business or profession. So when I read this definition, Kaushiki, online non-taxable recipient, there are few tests given. The recipient is making the payment through a banking account in India, debit credit card in India, through an address in India, through a dialer, your country code in India. Looking at these aspects, the OIDIR will get to know whether the recipient is in India, is a non-taxable recipient, or the recipient is not in India. On the basis of this determination, first they will evaluate whether it should be non-taxable online recipient definition is satisfied. If that definition is satisfied, I'll come to entry section 13, subsection 12 to evaluate those non-contradicting clauses. On the basis of that, I will say my place of supply happens to be India. So Kaushiki, if still you have a confusion, feel free to put back the question. I'll recap this particular point in our next session. Then Dhruti is asking this question. Section 13, subsection 13. Double taxation refers to taxation in other countries. Yes. Now we have this provisions of World Trade Organization. World Trade Organization. Where when there is a treaty between one nation to another nation, the treaty of Indian laws can say, look, these are the set of notified services. Though the services are being rendered to this nation, we would like to levy tax on these services as per the Indian laws. That's how a treaty is made between two countries. For that, we refer to the constitution, how the treaties are formulated. So this is answer to your question, Dhruti. Students, I have this MCQs. I'll quickly run. We are at 9:05. Please bear with me for another couple of minutes. I'll quickly wind up this discussion. MCQs. First MCQ. Hercules and Company, a registered person in Rajasthan, have supplied a machinery to their customer Zing & Co. of Tokyo. The machinery has a warranty of 18 months, and on account of complaint received from customer, the above machinery has been imported into India for refurbishment. Examine the place of supply for the services performed by Mrs. Hercules. So here, when the machinery was brought into India, refer to section 13, subsection 3, performance-based. If the performance-based is in India, the taxable territory happens to be the place where this registered person is located. Now, please keep in mind, if the goods are brought into India and sent back out of India without put to use, then I would say taxable territory is out of India. If this goods are put to use, then my taxable territory happens to be Rajasthan. This question has that one limb of clarity: put to use in India, not put to use in India. On the basis of that, your answer will be crystal clear. What I will do, I'll elaborate this and give a detailed answer for your reference purpose. And this I'll put it back to Board of Studies website. Point number 2. ABC Limited, a registered person in Tamil Nadu, have purchased goods from international suppliers, a registered person in Delhi, by way of exchange of title to goods while they are in transit from Namibia before they enter into Indian territorial waters. So here, there was a transfer of title to the goods before the goods have come to India. ABC Limited have purchased from international suppliers. So here, please recollect the initial discussion what we had, where we had discussed this Constitution of India, Article 269A, where this interstate trade of commerce is discussed. This principle, because it is an interstate trade of commerce, before the goods have entered into India, it shall be called as interstate trade of commerce. Here, it will be neither Tamil Nadu nor Delhi. We will say it is outside India. This point, there's little more to discuss. Next class, I'll recap one discussion on Schedule 3, and also I'll elaborate this MCQ once again. Point number 3. Import of goods into India for testing purpose and return back thereafter to the place of origin shall be construed as import of goods, not import of goods, none of the above. Now, this is not from service point of view. This is an MCQ from goods point of view. Goods in its cognate expression means bringing goods into India. So whatever be the purpose, once the goods are brought into India, it shall be called as import of goods. Point number 4. Let me just bring this. Yeah. Holiday Tours, a registered person in Gujarat, have rendered services to Mr. A. A happens to be a resident of London for Bharat Darshan, an educational trip as a tour operator. So here, service provider is in Gujarat. A is a resident of London. Because one of the parties outside India, Section 13 comes into picture. When we talk about this organizing a tour, provisions of Section 5 comes into picture. And this is a Bharat Darshan. Shall be visiting India, where he visits 10 states in India. So when he has visited 10 states in India, what shall be the place of supply? A, location of service provider. B, location of recipient. C, on the basis of identification of time spent in each of state. So answer for this, generally where the services are rendered. So here, this event has been conducted at multiple places. Since I have rendered this event at multiple places, I will refer to rule section 7. By virtue of applying section 7, we will determine the place of supply where actually performed on the basis of the days spent, on the basis of hours spent. Then my place of supply shall be clause C. Next, the last question. ABC designers, a registered person in Kerala, have provided services, structural design services to Mr. X, who is a resident of Tamil Nadu. Now, service providers in Kerala, service recipient in Tamil Nadu. When I have two parties in India, I don't refer to section 13, rather I refer to section 12. And this is in relation to a immovable property which is to be constructed, intended to be constructed in Washington. Examine the place of supply in this case. Now, with respect to section 12, subsection 3, where immovable property is located, that shall be the place of supply. Here, not Kerala, not Tamil Nadu. Rather, this property is intended to be outside India. My place of supply happens to be outside India. Can I call this as export of service? Answer is no. When you look at your entry, section 2, entry number 6, clause number 6, for your export of services, service provider should be in India, service recipient should be outside India. In this case, though place of supply is outside India, my service recipient is in India. By virtue of this, I will not call this as export of services. So with this, I come to the end of my today's discussion. Any questions which you have not answered, please put into the question window. I'll come back and answer in our next discussion. With this, I end today's discussion. I thank all of you for your patience listening. Good night. Goodbye.